Hello, good morning and welcome to Share Talk. I'm Charlie Gibson, and joining me in the studio today from MetalNRG are the Chief Executive Officer, Rolf Gerritsen, and also Non-Executive Director, Christian Schaffalitzky. Gentlemen, very good morning to you.
Good morning.
Thank you very much indeed for joining us.
Thank you.
Fair to say, I think not the largest company in the world, MetalNRG, but you've got this project in Arizona, Gold Ridge, former mine, and you have some exciting exploration results.
Yeah, look, the previous mines, or previously producing mines, there are actually three, and we're very excited about the opportunity and the potential upside. The focus here is to look at the old workings that are available to us and turn that into near-term revenue, and use that revenue to further explore the area. There's three historical producing mines. Within the range of those mines, there has been no modern exploration. In fact, there's been no exploration whatsoever, so there's a huge potential upside in terms of exploration upside.
So what I'm imagining here, when did they last produce?
In the late 80s,
Right.
and the other anecdote of this particular mine is the fact that it has not been closed for geological reasons, but the last operator actually had ore shipped, and that ore was stolen, and as a result the company didn't have any money to further progress their workings, and therefore they had to abandon the mine. And we've now picked
Who
it
steals
up.
ore except in films?
Well, it was going. Apparently, the shipment was going over the border to Mexico to a refinery.
Right.
And
it went over the border and was never seen again.
Correct.
Is that
That's
right?
correct.
That's right.
That's correct.
Unusual
So
story.
yeah, no, that is an unusual story.
But that there are implications of that, because that means that the workings left behind are in very good standing, and it gives us an opportunity to go back into certain workings that were done previously and accelerate the revenue process that we're looking at bringing about, to make sure that we can actually fund the further exploration upside that we have as an opportunity.
So the sort of the image I have in my head of these former workings are sort of small adits in the sides of mountains with railway tracks coming out. Is that a fair enough description, or is it?
Yes, it is. It isn't actually tracked mining, but it's three workings which were all worked at different times on a particular structure, about 1.8 kilometres long. And the last mine was down. There are several levels of workings as you go from east to west. And in the main mine, there is the workings finished on a face. You can see it, which we've been sampling, where clearly there were reserves still remaining at the time of the last operator pulling out. So that is the immediate potential, and which is what we're looking at for early cash flow.
Yeah.
There's also some dumps to be processed. Because there's quite high grade in the dumps also. This is quite a high grade vein system.
So last mine 40 years ago, has it held up well? Has any of it closed up?
No,
it's all exactly as it was left.
It's really good condition.
None of it's underwater.
None. It's impressive.
So you can walk in just as though, in the same way as the last miners walked out of it.
Yeah, the geological team were there last week, literally sampling in the old adits.
So you've now secured this ground.
Yep.
Yes.
And to take it forward, you need to generate a resource and then a reserve. Is that what you're going to do?
That'll be part of it, but also we're aiming to do early production.
Right. Okay. Are you going to do anything like a scoping study, a pre-feasibility?
It'll follow in parallel, basically.
Right. Does it need any? I mean, presumably it does need capex.
Yes, but relatively modest, because you'd use contract miners in the start. People come with the gear and charge you so much a tonne, and off you go.
And what about the processing? Because presumably there wasn't a plant there
No,
before, because they were shipping it all over the border.
Initially, we would just look at gravity, just because it's a very high grade. You're looking at grades well over 10 grams per tonne.
Right.
So it's easily processed. As you can imagine, much of it is free gold. So. From that point of view. But what is also very interesting is that this is an area which had been mined by old-timers who were basically looking at visible gold or high-grade gold, and nobody's done any exploration on the surrounding ground, which we have quite a big license area, and that needs to be looked at as well as we progress the mining operation itself.
Because actually, if it was closed in the late 1980s, that this is all sort of pre-JORC era. isn't it? So,
Oh, there's no JORC figure for this. There is a lot of different
is there a
estimates.
historic figure as well?
Yes, there is.
There is a historic.
Yes.
Can you tell us what the historic figure is?
Well, the mine, the Gold Ridge mine produced 22,000 tons of gold. That we know for
Ounces.
Sorry, ounces.
Ounces, tons.
Sorry, 22,000 ounces of gold. And
Do we know what time period?
That was in a roughly 10-year period, I think.
Right,
if I'm
okay.
not
So
mistaken.
2,000 ounces
If
a
that's
year.
correct, roughly. And
But you're not going to be doing those sorts of numbers, are you?
well, not initially, but we do have opportunities that are immediate, and those opportunities are going to be exploited as soon as we possibly can. There's some waste dumps that have been left behind that we're looking at monetizing, and then we've got underground, we've got some opportunities where there is literally visible gold that we can go after, and that's what we're going to be focusing on. That will produce revenue which will allow us to further develop the actual opportunity in terms of the exploration upside. You need to visualize the three mines. You've got one entry here which is called level 6. You go underground, that will then go up the mountain, and there's another 2 levels. Initially the thought was that there was a vein that we had lost contact with underground, under level 6, which is still the case. But what we have been able to do is re-establish contact with that particular vein between level 6 and level 4. So there's opportunities for us to go after relatively quickly that can help us generate cash flow.
So
and I think that's where the focus is in terms of, 1, our strategy, and 2, this particular asset and how we apply that strategy.
And can you get drilling rigs underground, or do you have to drill from surface, or do you send geologists into small narrow spaces with?
You can do both.
You can do
Pickaxes.
both, as Christian says, but last week we went in, and the geologists basically sampled a number of the pillars that have been left behind. Those results are imminent and will be announced to the market as soon as we have them and as soon as we've analyzed them. So that's the next piece of key information for us to then start understanding the overall opportunity that's available to us. At the same time, we have reams of data that is available to us, and the first point for us was collating all of that information, and we found historical graphs and hand charts from the 1930s when these mines were being looked at. And some of the annotations are quite interesting. You know, there's one, an MS shoot, which talks about a 17-foot wide ore vein which we have established contact with, and we're trying to determine in terms of opportunity and looking at that further. So there's potentially very large upside on this that we're establishing. But the key for us is to make sure that we're able to generate cash flow, use that cash flow to further develop the mine. That's really where the focus is.
Tell us a little bit about the geology of the mine. I mean, I'm assuming we're talking narrow, wiggly veins, sort of narrow, high grade.
What's interesting about it is that there are 3 workings that all had different time periods attached to them. So, as Rolf said, there's some mine. One of the mines goes back to the 30s, and then there's the one that finished in the 80s, and they're not actually connected at the moment. But our early work with the geologists on site is that all 3 workings are the one system. So, if you like, even that hadn't been looked at properly before,
Right.
and so there is quite a bit of, shall we say, development opportunities which have not been looked at by anybody yet. And as I said earlier, also the potential for, say, a bigger low-grade envelope to this thing. Nobody's looked at that at all, you know, which is what we would do nowadays. We'd be looking at, you know, an open pit target with, 1 to 2 grams or that type of target. Nobody's done that work at all. I mean, there's no country rock sampling of any kind.
And historically, what mining method did they use?
It's open stoping because the vein is not too narrow.
Right.
You know, there's no pit props or anything left behind. It's just freestanding.
And would you go in and would you be using the same methods, or?
Probably, but I'm not a miner. I'm an exploration geologist. But I can say that it's remarkable how little support there is in the mine as it stands.
So you think you can just go in and pick up almost exactly where the old timers left off?
I mean, when we say old timers, the late 80s
Late
wasn't
80s,
that bad.
right. No, all right.
So, but basically, yeah. I mean, you know, narrow in the sense that it's not 1 meter; it's 3.
Right.
You know, and so it makes a difference.
Yeah. So, in your this is going to require some capex,
Yes.
Any way you look at it, apart from anything else, for a gravity separation plant.
Yeah, but as I said, you can
Yeah.
get contract miners who will do an agreement based on tons per month, or that type of arrangement.
Okay, so does this mean you're not going to have to go to the market in order to raise any finance?
The strategy, the plan, and the indications that we're getting from the mine is that we can generate the cash flow to further develop the actual mine.
Right. So
that-
no need to go back to the
very
equity
clear.
markets at all.
If we look at Goldridge, if we look back a second and look at our strategy, it's looking for projects that match a number of criteria. Criteria one, it has to be able to produce short-term cash flow.
Mm-hmm.
That cash flow needs to be used to further develop exploration upside. So it has to be self-funding, and we're securing and making sure that that is the case. And that's really what we're working on and focused on with Goldridge, because it meets that criteria. And more importantly, there are a number of workings that have been left behind that we can monetize, and we can monetize quite rapidly.
Yeah.
So the idea would therefore be not to go back to market, use the cash that we produce from Goldridge to develop Goldridge.
Is there a potential open pit here? And you go
There's
underground,
been-
initially you generate cash flow, but you're doing the broader regional exploration you were talking about.
The exploration that we're looking at is I think twofold. That there is the immediate, because there are opportunities available to us to generate cash flow from the workings that have been left behind, and there's working through that to further explore a particular area within the existing mine. And then we have the opportunity, which is looking at the further exploration upside, which is the space between the mines, which is now considered and deemed to be one system, has not been looked at. And there's an opportunity as well. But the initial opportunity for us is going to be concentrating on the Prince and the Goldridge mine, and then moving on to the TV's mine, which is the second mine, which is further up, and then looking at the connectivity between that system and seeing if there's anything in between that.
So in your wildest dreams, sort of some 1 to 3 years out, what does the operation look like?
I think in my wildest dream, we've got in the very short term, we've got a large system that we can identify and get our hands around. We've got early cash flow production that helps us develop a sustainable operation, producing gold on an ongoing and a regular basis in a sustainable manner. Can I put figures to that at this moment? No, I can't, and I'm not going to be drawn into that, because
Order of magnitude, thousands of ounces a year. Could you?
Well, why not?
I
It's just
think
a
that's
question
very
of-
feasible.
It's going to be a timing issue, and how quickly we can move. I mean, we could identify, say, enough for 3 months mining and start then, or you could say no, we'll go for 6 months, or depending on what the contractor is prepared to agree with us.
Okay, but we're looking at several thousand ounces a year, presumably.
We should
is
do.
the
Yeah,
aim.
we should do, definitely. But you also have to realize that these particular mines have sustained other companies in the past.
Yes.
And we're looking at bringing that back, and we don't see why it couldn't sustain us. And there's a large opportunity, and the interesting aspect here is it's high grade, relatively easy access. In terms of infrastructure, it's outstanding. You literally come off the motorway and you drive onto our site. We've got electricity right outside our door. Water is not an issue. So we've got everything we need in terms of infrastructure. We're in the right location because Arizona is extremely friendly vis-a-vis miners, and there's a great opportunity to develop a sustainable mine.
Arizona friendly for miners.
Yeah.
Environmental lobby quite strong though.
Yeah, environmental quite strong, but if you look at the operations that we have a very supportive jurisdiction that is very keen to move and let us move forward. So comfortable there.
Market capitalisation of the company not large at the moment, 1.4 million roughly pounds. So percentage opportunity quite large.
I think if you look at it in terms of the market cap of the company, the opportunities are definitely on the upside. We're listed on main market. If you look at 1.4 million, it's small, very small.
And share price
with
at the
what
moment?
we have. Share price has picked up a little bit. I think there's from my perspective, and any CEO would probably say that there's only upside. And if you look at what we have in terms of Goldridge, we have a real asset. And people had not previously realized that we have a real asset there. and more importantly, that asset will produce cash, and it will give us a further opportunity on the upside. So from my perspective, the share price should only go one way, but again, I'm not going to be pushing that too hard, because any CEO will tell you that the share price can only go up.
Such is the nature of these things. But everything to play for, as you can hear. This is me, Charlie Gibson, signing off for Share Talk. My thanks very much indeed to our guests in the studio today from MetalNRG. We had their CEO, Rolf Gerritsen, and also non-executive director, Christian Schaffalitzky. As I say, that's all we got time for. Today we'll be back with more opportunities in the very near future. But until then, you have a capital day.